In our special segment, Quarter Se Quarter Tak, today the focus is on the FMCG sector. We have some big guys, HUL and ITC, reporting their numbers this week rather. Mangalam is here to tell us what to expect. Mangalam.
Big FMCG numbers this week. We have HUL, Asian Paints, ITC, Nestle, as well as Tata Consumer, all of them reporting numbers over the next few days itself. But, for the second quarter, it's an insipid quarter that the street is working with for FMCG companies. Why is that? Because of the twin problems. One, weak demand conditions, and secondly, all the companies are sitting on high-cost inventory. So those are a bunch of things that everyone's working with. And in terms of the management commentary that we've got through the quarter as well, weakness in entry-level products is something that the street has to navigate through. And, at the same time, while everyone is looking at this quarter as a bridge quarter between the first quarter of this year and the second half of this year, the second half is important because that is where you're expecting demand as well as margin recovery. So to that extent, this quarter may not be as important from a long-term investor standpoint. But despite that, we have some interesting trends playing out. Titan, for instance, announced an 18% jewelry growth on a high base. So that's telling you that the premium end is doing extremely well, whereas the staples where there is a problem. GCPL, mid-single-digit sales growth with mid-teen decline in EBITDA. You had the same problem with Marico as well. Consolidated revenue growing in just low single digits with no change in the EBITDA. And Dabur as well is showing mid-single-digit sort of growth with a decline of 150 to 200 basis points on the EBITDA. And this distinction is clear in regards with volume expansion, growth expectation as well. For HUL and Britannia, the volumes are expected to grow mid-single digits, slightly below that as well, between 3 to 5, 4 to 5 odd percent. Whereas for bigger players, discretionary consumption, Asian Paints is expected a 14 to 16% sort of growth coming in on their business, and ITC cigarette volumes likely to grow by around 14 to 15 odd percent. And it is this expectation in the second half which is baked into the price as well, because all these stocks are just around 5 to 6% away from their 52-week high. The FMCG sector has been an outperformer over the last 12 months. It's just Tata Consumer and Asian Paints which have been about 10% away from their 52-week high. Valuations for FMCG stocks have never been cheap, and we continue to see them at elevated levels for most of the stocks, between 37 to 61 times for Nestle. ITC has always had valuation support, currently trading at 21 times, despite the kind of rally that we've seen on the stock.